that paper loss, as far as I'm concerned, means absolutely nothing, because there's no way that the loss is going to stay there, because all that price reflects is what you would get if you had to sell. Because right now there's a distressed situation, there are unnatural circumstances, and if you were to sell your stock into that environment, that's all you would get on paper. And I could take a look at that and say, you know what, that loss means nothing, because I am not in a position where I have to sell. And since I don't have to sell, then the price means nothing to me. And ultimately, when those distressed sellers are gone, rationality will return. In the meantime, if I'm still getting the dividends that I signed up for, what difference does it make what the distressed market value of my stock is if I'm not distressed and I'm not going to sell? And yes, that paper loss doesn't mean anything. And it's not real if I don't have to sell, because I understand that the price doesn't reflect the real value of my company. It reflects what's going on in the market. And there are other, real world examples. And I've used the example, with a house, assuming a normal market, forget about this housing bubble we have now, but under normal circumstances, sometimes, if you have to sell your house in a hurry, you're not going to get a good price for it if you have to sell in a hurry. Maybe you have to sell in one day. You don't have a chance to look for a buyer. You're leaving the country, whatever's going on, the circumstances. You might have to set a price 20 or 30% below the market. That doesn't mean that your neighbor, that their houses are worth that, because they might not be in similar circumstances. They might not have to sell. Now, on paper, sure, based on comparable sales, your house just sells at this cheap price. That means, that's what their houses are worth. Well, that's only what their house would be worth if they had to sell under the same circumstances as you. You can also think about, prices. I mean, how much is a bottle of water worth in the desert when you're dying of thirst? I mean, somebody might be willing to pay $100 for a bottle of water when they're dying of thirst. In fact, they would be willing to pay whatever they had, because the alternative is that they're dead. But you take that bottle of water into a normal circumstance, and it's worth, $1 or 50 cents, whatever a bottle of water sells for. So right now, when people need liquidity and they need it fast and they have to sell now, their stocks are worth a very low price. But under normal circumstances, when they don't have to sell, the stock is worth its fair value. And I think that's what's going to happen. And I think a lot of the clients at Europe Pacific Capital that came to us, in the last 6 months or a year or even a little bit longer, who unfortunately, got in when the dollar was near its lows, and before the stocks really started to fall, they're looking at these paper losses. I don't think they're going to mean anything. I think they're going to be gone. And I think, if anything, what the paper losses mean is opportunity. They mean opportunity to reinvest dividends at more favorable terms. It's the opportunity to take the cash that you held on the sidelines and invest it at better terms. And I don't think these fire sale prices are going to be with us for much longer. And I certainly don't think the dollar is going to have this high exchange rate. I think this dollar is going to collapse, and when it falls, it's going to fall fast, and it's going to fall hard. And what we have to do is make sure that we get rid of our dollars. We take advantage of this opportunity to sell dollars and to accumulate other stocks. Anyway, I see that the calls have been piling up, so I want to go and take the calls. First one is Steve from Ohio.
Hi. I've been following you for quite a while now, going through your archives and whatnot. And you've talked about the tech bubble, in the 90s, and the housing bubble in the 2000s, and how you pretty much advise your clients to stay out of the tech stocks, and how you personally stayed out of the housing bubble by renting. I'm kind of new to all this, but why not, with the housing, for example, if you know this is happening, why not jump on, in 2000, ride the bubble up, and keep your eyes open, waiting for signs of, housing starts to go down or something, and get out and make a boatload of money. Yeah,
I mean, look, you can always say, see, here's the problem. It's very easy to gamble on something when you think it's real. So when people thought that the Internet stocks were real, they all got in them because they actually believed in them. I knew it was bullshit. And here's what happens. You get afraid, right? You get afraid that the minute you buy, it's going to be the end of it. It's because you don't have any conviction. And so what happens is, when you know the truth, it's difficult to gamble on other people's stupidity. In hindsight, I would have made a lot more money personally had I bought a lot of tech stocks and got out of them at the peak. But I don't know if I'd have done that. It's difficult. I just stayed away from it. The same thing with housing. I mean, obviously, when the bubble first starts to form, you have no idea how big it's going to get. And you watch it, and then you're amazed, and it gets bigger and bigger, and you think, well, gee, how long is it going to go? Can I buy, and can I get out in time? You don't know. Maybe you can, maybe you can't. But since you understand that ultimately it's going to collapse, it makes it difficult for you to commit money knowing you're buying something that's way overpriced and it ultimately is going to collapse, and you're just hoping that you can get out of it in time. So I just didn't do it. I also think I could have made more money on the short side than I did, because what happens is you also get afraid to short because you don't know how high it's going to go. But I think by just investing in the right things, like when everybody was investing in tech stocks, I just invested in energy stocks and mining stocks and ended up doing really well because I was able to buy those stocks very cheap. And when people were buying houses, I was able to rent my house very cheap, and I'm still renting a house cheap. And, and so I'm saving money by renting. But, sure, I could have made some speculative money, but I just didn't do it. Now, maybe other people did and made money, but probably most of the people that tried it probably ended up got too greedy and they didn't get out in time.
Okay, second question is trying to decide right now between gold, mining stocks and whatnot versus the foreign stocks. Which one do you think is going to go up first? I mean, would it make...
Well, I don't know. As I said, the gold stocks have had a pretty big move off their lows in the past few days. And, the price of gold is back above $800 an ounce. I mean, it's held up very, very well. And I think gold looks very good. But, they're different. The gold stocks, they don't pay much dividends. They're much more speculative. If you just buy the dividend-paying foreign stocks that are not necessarily just in precious metals mining, there's a lot of value. I mean, I've never seen so many stocks trading at low multiples with these huge dividend yields. And I don't think these bargains are going to be around for that long in the scheme of things. I mean, it could be another few weeks, another few months. I don't know. But in the whole scheme of our investment lives, this is a very short window of opportunity to just buy companies at prices that you'll never be able to buy them at again. And rather than people who own these stocks being upset to see that they're down from what they paid, they should get excited about the fact that they can buy more cheaper and just take advantage of it. I mean, that's what I've done personally. I owned all these stocks. Some of these stocks I owned a long time ago, so I bought them before they went way up. But, as I was earning money, I bought more. And so I bought some of these stocks at much, much higher prices. And now as they've come down, I'm buying them again at lower prices. And, that's what I'm doing.
Okay, thanks a lot.
Sure, thanks for the call. Next call is Marty from California. Is Marty there? Let's skip Marty. What about Sean from Toronto? Is Sean there? What about Hemant from New Jersey?
Hi.
Is this Hemant?
Yep. Hi, is this Peter?
How are you? You're on the air.
Okay, hey Peter. Just a quick question. Well, a couple of questions. I guess like most people, just kind of saw you on TV and just started reading more about you, and I actually read both your books. What kind of gold do you like to invest in, like the bullion or the numismatic? Like the gold coin?
Well, I don't have really any numismatic coins. I'm not. That's more collectors market, more specialty market. I mean, I just own the bullion. I just own physical, coins that sell for their bullion value, not for their rarity or their numismatic value. And there are people who do that, but I just want to own metals because I want to preserve wealth in real money. I want to own something that's liquid and that's safe and has intrinsic value. I'm not, the collector's market is a different market, and there's much bigger spreads involved, and I think you really have to know what you're doing, and there's more